Getting timely funding fast can be important to a small business. If your small business needs a convenient source of rapid funding, you'll want to listen to my Credibly review. Credibly is an alternative lender to small businesses, and my Credibly review will help you understand what this business does that makes them so successful and more popular with customers over the years. My name is Gordon Scott. I'm a small business owner who uses alternative lenders. I'm not a licensed credit advisor. This review of Credibly is my opinion only. The review is sponsored by FinImpact.com, a must-read website for anyone researching alternative lenders. There you can find information about a wide variety of loan types and the companies that provide them. Credibly is an alternative lender that offers a wide variety of loan types. They also have very lenient approval policies, and that allows them to work with as many customers as possible. This review will tell you what kinds of loans they offer, what it takes to apply for the loans, what it takes to get approved, and what customers have to say about their experience of working with Credibly. Credibly offers 7 different kinds of loans: working capital, long-term business expansion, line of credit, small business administration loans, merchant cash advance loans, equipment financing, and invoice factoring loan. Let's take a closer look at each one. Working capital loans have a term length of anywhere from 6 to 18 months. That's not very long. The repayment period is weekly or daily. So you can see that this is a kind of loan that is really meant to be attached to a flow of income for a working business. The annual percentage rate for the loans are based on factors, and these factors rates start at 1.09. That means functionally you're paying about 9 to 10% at a minimum. You can get up to $400,000 in working capital loans, but the higher the loan amount, likely the higher the factor rate is. Long-term business expansion loans have a term length of 18 to 24 months and a repayment period that happens monthly. Interest rates range between 8 and 25%, and the maximum amount they will loan will be up to $250,000. Credibly also offers a line of credit. The repayment schedules on these might be as short as 1 year, but some can be open-ended depending on the conditions of the loan. It's very flexible. Some line of credits might have a term length attached to them, but others may be fully open-ended. The repayment schedule is monthly, and the annual percentage rate can be as low as 4.8%, with a maximum amount up to $250,000. This is a very competitive rate from an alternative lender. Credibly also offers small business administration loans. The term length can be anywhere from 2 to 25 years. The repayment period is monthly, and the annual percentage rate can start as low as 7%. Another kind of loan is a merchant cash advance. The term length here is anywhere from 3 to 18 months, but the repayment period is daily. That's because they're expecting you to repay based on money that comes in through your daily receipts of the business you run. So this kind of loan is better suited for a retail business that is doing sales every day. The annual percentage range is based on a factor, and it can start as low as 1.09, which equates to about a 9% interest rate. Credibly offers up to $400,000 for loans of this type. Equipment financing loans are based on the working life of the asset you purchase, and they have a repayment of the monthly period. The annual percentage rate can be widely variable for these types of loans depending on what kind of equipment you're purchasing. So it's not disclosed on their website. It's the kind of thing you have to figure out in talking to them. It's not a big surprise that they do it this way when you consider the amounts of loan. It's not a big surprise that they would do it that way, considering how much they're willing to loan for equipment financing. Credibly will offer up to $10 million, or as little as only $10,000, so you can understand if the terms are going to be widely variable. Invoice factoring loans usually have a term length of only a month. This is the kind of thing where you get money based on an invoice that you know is coming in. They basically want to give you the money now so that you can do something with it today rather than have to wait 20 or 30 days for an invoice. If the invoice has a high degree of possibility that it's coming, there's no problem. Once the borrower receives their invoice, then Credibly expects to be paid. The annual percentage rate is not disclosed because it would probably seem exorbitantly high. But an annual rate isn't really applicable in this situation because the length is only 1 month. Credibly has been successful offering up to $400,000 for this kind of loan. Let me be clear that working with Credibly or any alternative lender of this type is going to come with convenience but high expense. That's just the nature of this kind of lending. They are convenient and available, and sometimes that's the most important thing. But it's all about balancing opportunity and risk. The opportunity should be very big and the risk should be very low. If the money your small business can make from these loans is the difference between success and the failure of your business, it's probably not the right way to go about it. You don't want to be making make or break decisions over these loans. Instead, you want to look for opportunities that might help you grow rapidly as opposed to slowly stagnating. The small business owners that use these kinds of loans have a very clear understanding of opportunity compared to risk. Go into this type of venture with your eyes wide open. Now, let's look at the process of applying for a loan with Credibly. The pre-qualifying application is very simple and can be done in about a minute or two. Depending on what kind of loan you want, the next step might be for a Credibly representative to contact you. At that point, there will be additional forms to fill out. But the whole process takes less than 30 minutes, and if you are approved within the next 4 hours, funding can come to you in as little as 1 day. It's a straightforward process that Credibly has refined over the years, and they make it very easy for borrowers to deal with them. The pre-qualification application does a soft credit pull. Now, you might not know the difference between a soft or a hard credit pull, so let me give you a quick explanation. A soft credit pull, as explained by thebalance.com, does not affect your credit score. It's actually a mechanism that banks use for pre-qualification. They look over information collected by a third party other than the major rating agencies, and they get an idea of whether or not you're qualified to go ahead and take this loan. Legally, they don't even have to ask permission to do that because, in theory, it's not going to affect your credit score. A hard credit pull is actually going to one of the major reporting agencies. And of course, that will affect your credit score. But it's important to understand that in the pre-qualification, the lender only does a soft credit pull. Now, once you take the loan, that is the equivalent of a hard credit pull as well. Depending on how much of a loan you take and the health of your business, the impact to your credit score will vary. But if you complete the loan and then pay it all the way back, that can actually help improve your credit score a few months later. But just be aware that the process of applying and then taking the loan will have an impact on your credit. So just what do customers think of Credibly and how it does its job? The first thing I checked was the Better Business Bureau rating, but they don't have one. Looking at Trustpilot, however, their record looks pretty good. They have over 1,000 reviews. Out of all those reviews, over 92% of customers rate Credibly as excellent or good. Only 5% of responses rated Credibly as bad. Among those rating their experience with Credibly as bad, the issues were dispersed over a wide variety of topics. So I don't think it's any one thing that Credibly does poorly, it's just that not everything works right. A Credibly representative actually leaves a response right on Trustpilot, usually a detailed one, to a lot of these customers who report having had a bad experience. So I get the idea that as a rule, they are very attentive to their customers. I'd recommend you check out the full review at finimpact.com.